If you live in Southern California like I do, there's two reasons why you might not want to invest here. One is because you may or may not like the market locally. Many people, like I'm one of them, find it to be so aggressive against landlords and pro-tenant, difficult to justify. There are people who do it well, and but I'm not one of them. And the second reason you might want to invest somewhere else is just to diversify your business. Personally, I make a living helping families, attorneys sell probate real estate in Southern California. By investing in other areas, I can diversify my income. So diversifying out of state is an opportunity, but of course it's challenging and risky, putting your money someplace where you're not going to be every day, and then how you find people and keep an eye on that for you. So that's what we're going to talk about today. I'm Bill Gross. Welcome to our LA County Real Estate Investing Association weekly Lifecast. We get together every 3 p.m. on Tuesdays to talk about all things real estate investing. LA County Real Estate Investors Association, LLC. Shortcut, the website is LAREIC.com. And we have a free meeting once a month on the second Thursday of the month. That's kind of what it looks like. There'll be a class with a speaker, and then this month's speakers happens to be 4 ladies. I happen to know 2 of them really well. Deborah Razzo, one of my friends, Jen Maldonado, another friend. These 2 ladies, don't know who they are, but I'm sure they're good. And they all talk about, in particular, women who rock in real estate. That's Thursday, May 11th, 6:30 and 9:30. It's in the West LA area of, I call Culver City or Palms, at the Ivan Cultural Center. It's free event, free parking if you get there early enough. And then I think one of the real highlights is before the event starts, there is a vendor expo, I don't have a picture of it, of people like me there. We usually get about 50 vendors at tables. In fact, there's a video of it right there. I'll show it to you. And just people kind of interacting and selling. We have about 50 different vendors. And then if you get there but at 6:30 to 7 or so, there'll be a chance to meet with them individually. I got to tell you, this Vendors Expo, personally as a real estate broker, I have found a insurance agent that I think saved a couple of deals for me. I found a vendor who does hazmat type work who I used on the deal. I found a CPA firm that does my taxes and has done a great job saving me a lot of money there. A couple lenders, a couple clients. So I know I've made more money going to that event than I ever spent as a vendor. But as an attendee, you go for free and have a chance to educate and meet and network with people as well. So today I had thought I had a guest lined up, and I know I sent confirmations. I'm not really quite sure if he's running late or something came up and didn't work out right. We want to talk about today about investing out of state specifically, and what strategies to do that. So I'll just share with you that personally, I invest out of state, and I have 2 different strategies I've used. One is what I would call kind of like a stock, which is where it's a fund of money where you're a very small piece in a whole multi-million-dollar pie. And the company I've used for that is Cardone Capital, Grant Cardone. You can start with them as little as $5,000. And what I liked about it was when I was a little nervous and scared, I started with that, but I learned a lot. I want to say that even if I lost the $5,000, I got back education in their materials, in their he throws in a couple of coaching calls and reviews of his portfolio that other investors don't really do. And so I looked at it as a way to learn as well. And that's worked out really well for me. I get a nice return on my money, better than the stock market. And I've learned a lot from it. Another way to do it is to be a partner in an investment. And I've done that as well as a limited partner, where typically there are different types. Some require you to be qualified, where you have to have net worth over $1 million or income, I think last 2 years over 250 or something like that, whatever that number is, or not accredited. And they will require and either way you have to meet with them and talk to them on the phone or a video. And oftentimes you can get started with as little as $50,000. And your money is pooled with 10, 20, 50 other investors. And typically they'll buy a property, fix it up, bring it to market over a 5-year period and either refinance it or sell it at a profit. And what's nice is you get some of the tax advantage of real estate that way as well. You get the immediate depreciation. So typically the first year I invest $50,000, I get a write-off on that year's tax returns of $30,000, $40,000 against other income because I'm a professional. And then you get about a 3 to 5%, maybe 8% cash on cash return. And then if it's a good investment, at the end, they're going to refinance or sell it. you get back the rest of your initial investment plus a profit on top of that. And so many of them have a goal of 10, 15, 20% or more annual rate of return. The high return they promise, just know it's the riskier deal. And so the key is you want to find people who you're putting your money with that you trust, that you trust to find the property, to run the property, to do the work that has to be done to it. Whatever has to be done, somebody's got to do it if it's not you. And so you have to spend your due diligence researching not just the deal and the property, but also the team. So personally, I do a lot of online networking like this where I'm the guest, or I'm sorry, where I'm just an attendee, and I'm looking to hear the guests or the host talk about opportunities and teams. Then what I do is I invite those people to come guest on my call as a way to vet them and see how they operate. And I also learn, without them pitching me, what they're offering and if I like the investment or not. And then maybe afterwards, I'll call them up and we'll make some sort of deal. And I was talking to somebody before we started who kind of described, my goal, which is I make more money than I spend. I take the excess and invest that in real estate for the most part. Now I do balance my income. I balance my investments, some real estate, some non, because I'm in real estate. I think it's only appropriate to diversify a bit. And because I'm older, my wife's retired and I'm probably, a couple years away from wanting to stop working full time and cut back on my hours. So for me, it's more appropriate to diversify and be more risk adverse. If you're younger, I wish I had when I was younger, put all my chips in, because the more you have chips in, the more you can turn them over and over again to build up an investment portfolio. Now, that's the strategy that I've used. And there's a third strategy, which you can buy a property. We happen to have, I don't know if you want to talk about it, but I was just chatting with one of the attendees before we started about his journey on buying a property. It's not like he's done pretty well with it. But, either you have to know somebody in a remote market, or you have to be willing to go there. I've had a good friend, Avraham, who's been on this call, who decided for various reasons to invest in Kansas City, Kansas, not Kansas City, Missouri, nearby, sister, I guess, cities, and flip some properties. Now, he and his wife like going to Kansas. You have to like going to that area, and you got to find people there to manage the process. And so he's done both. Challenging, but he's made good money flipping those properties and learned quite a bit along the way. Another strategy, you can have somebody there who like, and trust, and you have the money, you help with the research, maybe they're doing more of the footwork and so on. So those are the alternatives. So again, I would say you could be like a mutual fund investor where it's a small amount of money. You could be a limited partner investor where you put in more. You can be a syndicator yourself and raise money, or you can find a property within your own finances and buy and fix it, but you need to have somebody there probably to help you with that, make that happen. So those are kind of the options. I know on the call, I saw he jumped in and jumped out real quick, is Lloyd Siegel. Lloyd is the proprietor of the LA County Real Estate Investors Association, and he has training classes. If you come on the 11th, you get offered the opportunity to come to various programs and classes he offers, a boot camp and coaching and those kinds of things where he'll take a more personal interest in helping you. And we've had other people he's brought in that we've shared here on this call. I do think that you have to have three things if you want to transform anything in life, whether it be real estate investing or any business. You have to have a leader or a coach or a mentor. You have to have a methodology or a system or a book or a program. And the third, you have to have a group, team, classmates, community. And with those three things, I think if you find a program that has those three that fit your flavor, your style, they will help hold you by the hand and move you through the process as far as real estate investing. My goal here is to be maybe a supporting piece of that, where you can come in, ask questions, and also share victories and share lessons learned. We don't have failures. We just have lessons we learned along the way. So that's kind of my overview on investing, particularly out of state. Anybody have any questions or comments or want to share their own experience on the subject matter?
Bill?
Yes, Jack Lapidus.
So I don't personally do investing yet. I help my in-laws with their real estate investing. But one thing, and they're divorced and they have different strategies and such. One of the things I've learned in this sort of journey of helping real estate investors is that you have to find the type of investment that speaks to you.
Yeah.
It needs to make sense to you. It needs to be something you understand, not something that someone else understands or likes and is trying to push on you, and something that you've done enough research and have been comfortable enough with it that you can stick with it. Because the worst thing you want to do is start down one road and then I'm going to mix my metaphors. You start down one road and then try to change horses. And, that in any kind of investing, that's not a great plan. But it's very interesting because I go to the Sizzler meeting every week, and you hear about all these different kinds of investors, and there's people who like notes, and there's another guy who he invests in Kansas City, Missouri. I think you're talking about a different person.
Yes.
And then there's someone who's all they're doing is in St. Louis. I don't know about Missouri, whatever. But it's like, and that's their thing. And I hear people talk about, well, I like single family homes versus apartments, which is actually my in-laws kind of have that dichotomy. And, and there's this argument, if you have a single family home, you only have one renter. And if it's a bad renter, it can destroy you. Whereas if you have multifamily apartments and you only have one bad renter, you still have the 3 or 8 or whatever other renters. So it's a long-winded way of saying is, make your own mistakes, don't make other people's mistakes, and don't do what other people want you to do what you feel comfortable doing. And I think that a lot of people who are successful in real estate are doing what they want to do and what they understand and what they like.
Yeah, I think it's very well said. My experience is with that exactly. It's funny how people will tell you how their particular niche is the best. And I don't know that they're right or wrong. They're right for them. And you got to believe in it. You have to put the time into it. I think it's like anything in business. I'm in residential real estate. And there are a lot of people say, I would never want to be a realtor. I couldn't imagine doing open houses. I don't do open houses. I can't imagine driving people to houses. I don't drive people to houses. I found a way to write the business that works for me. And I love what I do. And so I think you have to, in anything in life, and real estate investing would be one of those, find something you're excited about, you believe in, that you're going to put the energy into, because it's work. There's nobody makes money in real estate investing who doesn't put a lot of work and time into it. And I also get asked often, what's the easiest way to blank, blank, blank? And I say, I wouldn't know, because there's nothing that's ever been easy. It's been worthwhile in my life. Everything that I've ever done required work and time and effort, and energy, and probably had some learning experiences, aka failures along the way. So I think your advice is right on. And thanks for mentioning the Sizzler. As much as I love going to the LA County event every month, weekly on Wednesdays at the Sizzler in Van Nuys at noon, there's another real estate networking event. There's a lot of crossover people go there. And in fact, a lot of people I know at the monthly event go to the Sizzler event as well. I know you, and I know I've got a blank on the legal team. What's her name? I'm so embarrassed. But a number of people who go to both those events. So that's Wednesdays at noon at the Sizzler in Van Nuys. If that's something you're interested in, reach out to me and I'd be glad to give you those details. Okay. Jack LaPena, so let me ask you this. You've seen a lot of people over the years, your family, but also at the Sizzler event. What's the common denominator about people who stop just talking about getting invested in real estate and actually invest in?
Yeah, that's a good one. I think that there's a combination of a certain level of confidence and, for lack of a better term, desperation. And not like they're on their last. It's just like, a lot of people they'll research and they'll do this and they're, afraid of whatever. And at some point they just they're like, look, I need to do it or get off the pot.
Yeah.
And, it's great to find a person who you can partner with, so you can see that first deal. I'm hearing that as well. Someone who you go into partnership with, or you pay them some sort of fee where they're helping manage the transaction or whatever like that. And sometimes that's all people need to get over the hump.
Yeah.
but it's very interesting. I have found that if I see people, I'm going to be specific about the Sizzler because that's a weekly thing, and so it's you get a lot of data. If I see people at the Sizzler thing for 2 or 3 weeks and I listen to them talk, I can almost tell you whether or not they're really going to do it.
Yes.
And it's not, it's not because they come off as a wet blanket, because there's some very good investors who are not great speakers or don't have great personalities or whatever you want to call it. It's what they're saying, how they're saying it, how it changes from one week to another, how before or after the meeting part at noon. We meet at 11. We start meeting at 11. We have lunch from 11 to 12. And so that's like prime networking time. What they do before and after and how that changes from one week to another. There are times where once the 12 o'clock part ends, I leave because I don't have anything to do. But there are times where I see people who I want to talk to. And you see these new investors, and if they're getting up and leaving, or if they're showing up and they're just buried in their lunch until noon, that's not a great sign that they're going to, that I wouldn't bet on them becoming an actual investor, at least not in the short term.
Well, and I have a term for that because I'm in real estate sales, and I don't get paid unless something happens at the end of the day. And to me, those are people who are in real estate for the entertainment value, right? They go to the meeting, they may get there early and chit chat, but they don't have any purpose to it. They eat their lunch and then they go. Versus, I'm there to meet people. I'm there to look for opportunities for people who have problems I can help, and that's how I build a business. And so I'm trying to figure out who's interesting, who has some value to create, and figure out how to connect with them. And if you're not doing that, there's too many people. There are a lot of people who've, they're retired and they say they're an investor, and they'll talk to you all day long and they'll go look at properties all day long. They're just never going to buy anything because their entertainment is saying they're an investor. It's better than saying I'm unemployed. It's better than saying I have nothing to do all day. If you're married, you want to go home and tell your wife you have nothing to do. So what do? You say, we're not looking for property. The difference is a real investor will look at a lot of property, but they're doing it, with a purpose. Ernest asked a question, asked twice. Sorry about that. It's not that I ignored you, Ernest. I was in the middle with Jack, but great question. What states do I invest in? What do I prefer to invest in? So the first thing I would say, Ernest, is I live in Los Angeles and I don't want to invest anymore in California, as I mentioned personally, because one, I don't think it's a great state to invest in. And I say this as a native Californian, is with great disappointment and embarrassment. In my lifetime, California went from the greatest place to do business in to, I think, a place that just scares me every day, more bad news. So I would never invest money here. My goal is to move out of California. And then second, my criteria would be someplace that I can go see the property. And so I travel annually to Texas and to Florida on business. So currently, my investments are only in Texas and Florida because I go there on business already. I would look at Nevada as well because I go there as well. I just haven't found anything in Nevada that I feel comfortable investing in. But I'm going to go there again in November, so maybe I'll find something. So for me personally, Texas and Florida is where I have money right now that I've invested. Anybody else want to share there? Chris DeSalle, nice to see you, man. It's been a while. What city in Texas? So it's funny, again, we're talking before the call, and one of the guys was mentioning how he invested near, I think he said Knoxville, but outside. So for me, I would only invest in a major city that's a healthy, growing city. And I would only invest in multifamily properties, 200 units and up, where it's big enough, where the kind of company managing it, that's all they do. And they have several similar properties. They have several properties in that market area. So that if something happens, they could bring in the crew from the other property. They already hire property managers. They already have 3 or 4 in that area. They can cover temporarily, and they're always hiring people. So I'm looking for really a company that has some scale in that city, typically, or overall. And so in Texas, I have money invested in Dallas. I have money in El Paso, San Antonio. In Florida, Miami, and Fort Lauderdale. I'd love to go to Jacksonville. I'd love to be in Orlando, just haven't found the properties in those areas. Hope that helps a little bit. Okay. Well, great. Thank you for the questions there, Ernest. Hope that helps a little bit. But again, that's me. Why South Florida? Because that's where I go. I went to Aventura on a vacation, so I'm going to look around there. Texas, I went to Dallas on a business trip, so I'm going to look around primarily Texas. I used to do business in El Paso with a partner years ago. Do I have a corporation in Texas? No, I only have a corp in California because I don't own. I'm a limited partner. So there's no real tax advantage to me if even in a state where there's no corporate income tax, say personal income tax, I'd be subject to it. And if it was a corporate tax, you pay corporate in those states. So there's no advantage to me to have a separate corp in Texas or Florida. I think the whole thing with corps is oversold. I see so many I see more investors that have corps than property. And you can get a corporation done online in days. I literally have clients who bid on a property, they get accepted and they form their corp and they have it before we close escrow. That's really how professionals really do it. And so there's no reason to, because now with a corp, you have to pay, income taxes or corp taxes the filing fee is $800 in California every couple of years. I think it's after the first 2 years or something for free, but it starts to add up. And so $800 just to have a corp on hold doesn't make much sense to me. Okay. Any other? Thank you for the questions. Can you own a property in Texas with a corp in California? You can own property. Yes, I do. I own a property. I'm an investor in a corporation where I invested money through my corporate entity. And what about an LLC? Again, I'm not sure how you would use the LLC. I run all my real estate through one corporation and then spread everything off from there. And I know there's people with more sophisticated organizations than I have, but I just at some point you start spending more money on all this stuff than you do spend your time selling houses. And if I can sell an extra property to make $25,000, that kind of covers up some of the other stuff I might be able to do. So I try to focus on that. But yeah, you can own a property in Texas through a California corporation. And what cities in Florida do you like? I love Jacksonville. My best friend moved there. So about 2-3 years ago. So Orlando and Jacksonville are very business oriented and the business climates there are fantastic. Miami's gone up so much so quickly and is very tied in internationally to migration, where Jacksonville and Orlando are both, I think, more businessy, and Florida is just, they asked, what about the hurricanes? Yeah, there's hurricanes. Whatever. We have tornadoes in some states. You have earthquakes in California. You have hurricanes in Florida. So,
can I tell you something about Jacksonville?
Please.
So we used to own in Jacksonville. So whenever we meet, whenever we decide on a property, before we decide, we always meet with the local chamber of commerce, and they actually have in their chamber, they have a meteorologist on staff at the county. So he introduced us to that, and it was awesome. So we went over to see him because of global warming and the seas warming. The hurricanes, they haven't had a direct hit in 24 years in Jacksonville. Now they get residuals and stuff, but the swirls are staying farther out coast, and they're hitting North Carolina. So that was one of the decisions why we bought there. So
nice. I used to live in Florida, and so here in California we don't get this, but there they sell weather tracking maps. So you go to the gas station, you fill up, and they give you a map, and you can track where the hurricane is, and has all the terminology on it. It's so interesting. Now that goes back a ways, but here in California, we don't track hurricanes or tropical storms. So thanks, Chris. Do you guys have anything you're currently offering for investors currently? Where are you guys at right now?
Not yet. We're looking. We're waiting. I just got off of 2 really big calls yesterday and today from pretty big broker groups that they're gonna the end of the third quarter and the beginning of the fourth quarter, because of people aren't going to be able to service their debt to service coverage ratio, which is DCSR, which there's going to be a lot of product that's coming on. So we're smiling and dialing on pre-raising, because we're probably going to get 4 or 5 deals all at once.
Well, don't forget your friends, Chris.
No, I know. Yeah. So it's no, they'll be good, and they're going to be at discounts, but not extreme discounts, but they are going to be at discounts, but not like crazy like everybody thinks.
I think you're right.
So
There's just so much money sloshing around that
yeah.
before I can go down too much, there are people buying. That's what you see on the retail side in Los Angeles is fewer and fewer people can buy houses, but enough people, enough money that they're going to buy houses and they're going to pay the higher rates. And you say, well, it's crazy. The values are crazy. The rates are crazy. Well, the money they have is crazy. So, it's like a monopoly. Once you have a certain amount of money and all the properties are bought, what are you going to do with the cash? So at some point, people are going to put the money somewhere. So
what we did, and I encourage everybody to do it too. So we picked out 2 cities very specifically. We built a database of all the apartment complexes within the city and the submarkets, and basically like a heat map. And then we have a CoStar subscription, so we took that and Census.gov, and then a bunch of other really good data sites, and we basically identified the properties for the brokers. So they know what we're looking for very specifically, because if we go for like, let's say the 400 and above, Blackstone or BlackRock, all those groups are going to come in and sweep those up. So we're going to go for a little underneath those, and because they won't look at those, and they know that. And the cool thing is now that we have really, how they always say that you got to have really strong broker relationships. It's so true. I feel like I'm running for mayor half the time, but it works. Because the one guy just told us, he's like, "Oh, we love you guys," and I thought he was just being nice to us and stuff. And I'm like, "Oh yeah, why?" He goes, "We'll call you, and you'll call us back within an hour, and then prove to us why you don't either like or dislike a deal. If I call like a bank in New York, they're going to have to bring it to their investment committee. That's 2 weeks. Then their investment committee is going to look at everything as a whole. That's 3 weeks. So those little things that you don't think really add up to stuff, it does. So a lot of little things that I've learned over time. So if anybody can, keep those brokers close to you, because they're going to give you the deals.
You share what cities you guys are looking at?
Yeah, Houston and Dallas, and North Houston, just because the economy is booming, even in the economic, woes that we're going through. They just had, so I just got off the phone with Kathy, their local chamber of commerce, that they have $2 billion this quarter coming out of new VC money, spread across different industries, not just, everybody thinks oil and gas in Houston. It's still in the top 10, but it's not the top 10 anymore. It's actually medical. So
yeah, I say medical, but this is with Houston with oil really under attack in a sense versus what it was 2-3 years ago. Imagine if things just went back to kind of normal, like not under attack, not booming, which is what would do to Houston. It would be insane.
In the United States, Houston's going to be fine for a long time.
Yeah, I think you're right.
So just
like
because of their infrastructure for oil and other things, but they have 34 Fortune 500 companies now based there. So
wow.
So they're they're not going anywhere, and they're heading the right direction. And same with Dallas. I mean, it's just booming.
Yeah.
So,
and
we can scale there too, because we already have teams in place. So we're not going to have to train a new staff.
Right. I was saying you want to work with somebody who's got scale, and you guys went through a little period there with a turnover, and you manage that. I think that to me is the sign. Everybody has problems from time to time. How do you handle the problems? That's what I always look for. So
one thing though too, everybody should know is we used to write for staff at $1,300 a door. Now it's up to $1,700 a door for staff, on-site staff, because inflation and the cost of everything has gone up. So just when you're writing your models, make sure you include that bump.
What was that number again?
It's $1,750 now per door. That's the average.
But so $1,750 on a 200 unit project, that's $350,000 a year of staff compensation, salaries, and benefits, right?
Yeah.
So you're talking about property manager, janitorial, or whatever the services, gardening services. It's a group of people. It's not some guy.
just 2 years ago, that same was 1,300. So
yeah.
Inflation and God bless them, but just you got to model that out correctly.
Yeah, and I think that's every business has this challenge now. Is they used to hire people I was talking to my daughter about nannies, and you used to hire people at $20 an hour. Now they get 25, and it's not like they get 25 and they jump for joy. It's like you got to compete and close them at $25 an hour in certain markets. Now, in other states is different, but yeah, very interesting. Well, look, Chris, always good to have you. We need to get you back on once you guys have something that you want to talk about, a webinar or something. Love to have you back as a guest and promote
Sure.
What you guys changed the name? It was Cloud Capital, and now it is.
I can tell you something else too. There is that. So one of the things we looked at. So we used to be called Cloud Capital. So whenever we'd buy a new apartment complex, we'd always change the name because we wanted the stink of the old owner get away as quick as possible. New sheriffs are in town, and we think we're really good owner operators. We want to give the residents a new sense of life and a new purpose with us. And that the hardest thing that we do is change hearts and minds of the present residents, because it usually takes around 6 months, and they think we're going to be slumlords, and we're not. We pump in a lot of money into these places because we believe if you give the resident a great life, everything else will work out. Like, we can talk sticks, bricks, and spreadsheets, and it's super important to talk all that. But if you know your customer and you prop them up in a good way, everything else will work out.
Yeah.
So
and if you don't, nothing will. If you don't, nothing will work out.
Right. And nothing will. It's like, it's crazy. And that's why I don't understand the slumlord mentality. They're worried about nickels when dollars are flown out the windows. So it just doesn't make sense. So we looked over at our overall deals of the last 3 years. How could we save money for our investors and really bring some more money in without spending so much? So we looked at branding. So we changed our name to Discover Multifamily. And now going forward, it's going to be the Discover at Anaheim, the Discover at, Culver City, or Discover at Austin, Texas. So everything is going to look the same. The signage will be the same, because it would take us usually around 20 to 30 grand to rebrand with signages and, websites and everything that goes along with it. Now we're going to use that same formula, and we're going to use the same designs on our apartments for the rehab. So it's going to be the same, like granite countertops, the same, wooden floors, the same cabinets. And so when you walk into any one of our complexes, it's going to look, top shelf, and we're not going to have to repay for all that.
Well, I think what you're describing, what you're seeing with your competition, I think the good ones doing the same thing, is that it's what I would call the regionalization and or nationalization of the industry, right? Up until now, it was primarily local independent operators, and each property was an independent operation. And just like, every other business, it used to be all restaurants were local. Now, so many restaurants are regional chains, national chains. Car places, getting your oil changed used to be a lot of local shops. Now, more and more, there's national franchises. And so I think it's hitting the real estate management industry as well. The idea of branding, trying to get, the benefit of a consumer drives by one of your properties, drives by another one. If that one looks nice, they're going to feel good about your other one, even if your other one's right in the beginning of phases of the rehab. So to me, that strategy makes a lot of sense. I see that, one thing I just in common, if anybody watching this, I see this all the time. All successful operators brag about their tenants' experience. They all tell you how good they do and how important it is to them. And, of course, if you have happy customers, everything else works out. And if you have unhappy customers, maybe you can eke out a profit if you have enough security, I guess, and legal staff, but it's a miserable way to live your life. So,
yeah, it's really important, I think. And then the one thing too, people always just talk cap rate to death, and they don't really understand their industry. To be honest with you, it's important to know all those terms and everything like that. But you got to start with the customer, work backwards, and everything will work. So.
Right. And so you're finding markets that have customers that fit that market for you, and that's why you're looking for the properties there, I think.
Yeah.
To some degree.
So.
Well, great. Chris, always nice chatting with you.
Yeah, nice. Thank you, Bill. I love these Zooms. So.
Thanks for dropping in.
I always learn so much.
Likewise. You're a big part of it. Thanks. Okay. Who else has questions, challenges, problems we can share? Tony Ayala asks, he's coming in on our YouTube channel, the details on the Sizzler Meetup. So I'm going to put that in the Prosperity Through Real Estate. There is a link. I'll share. It is a competing company to our sponsor. So I'm going to just say, please forgive me, Lloyd, if you find out about this or are listening to this. It's kind of a competing organization, But I think it's complementary in that the more education you get, the more effective you're going to be. So Tony, if you're still watching on the YouTube, I just put it in the chat. And for those of you who are on the Zoom call as well, I'll put it in the chat. It's weekly Wednesday. It starts at 11:15 at the Sizzler on Van Nuys Boulevard. And I put the link in the chat box. And that's a competing organization to ours called Prosperity Through Real Estate. I think that I'd love them to find a way to work together because I like the weekly meetings. And then the other group has their own monthly program. I don't go to that. So I go to their weekly program. And I go to the monthly program through LARIC.
I don't see how they're competing in a realistic way. I think they are complementary to each other. It's not like one group badmouths the other. And I've heard people mention both groups at each other, and it builds, I think it's more of a camaraderie than competition, to be honest.
It should be. I'll say this. I think that if everybody who came to the larger monthly event went to a weekly event, they'd all learn more and be better investors. And if the people who were at the weekly event came to the monthly event, they'd meet more people, and that would help them once a month as well. I just think it would be good for both sides. So, yeah. I don't get paid either way. I'm just here to share my experience, strength, and hope, and let us see everybody learn and be successful and network and do more business. So, but thank you, Jack. Thanks for the confirmation. That also means if I get sued, Jack will be defending me in court gratis. So pro bono. So, Jack, thank you so much.
Where's the monthly
you
meeting?
Pay for it?
It's at the Sizzler on Van Nuys Boulevard in Van Nuys.
No, where's the monthly meeting?
Oh, the monthly meeting is LARIC's meeting, and their new location is the Iman Center in West Los Angeles. It's called the Iman Cultural Center. I'll put that up too. Let's see.
Yeah, it's right around the corner on Motor, right?
There you go.
Yeah.
Exactly. I could almost walk there. It might take maybe it's about 3-4 miles from my house. This is the wrong date. It's the monthly. It's the second Thursday of the month. Second Thursday every month. And 6:30 to 7:30 is it actually starts earlier. 6:30 is the vendor, and then the speech will go to about 8:30 or so. But it's free, and they get this picture, not this one.
Been there for a Saturday, but not a monthly one. A Saturday one. That was pretty good. So
they get about 250 people there for the speaker. And then before the speaker, they have a vendors expo that has about 50 different vendors. And I showed the picture of that here earlier, but that's a video. I think I took this one. Maybe they did it. I think it's one I took though, of the about 50 different vendors, and then people meet. And so I think for like you might meet other vendors to market with or coordinate with, cost segregation guy there, insurance guy, a hazmat, removal guy. So there's all kinds of good vendors. I've made a lot of money at that event. I made money at both. The Van Nuys one, I probably do about $50,000 a year of commissions from that group too. So definitely they're both, I think, very valuable meetings, and I really want both of them to grow and do well. Ernest, a lot of questions about Florida. Do hurricanes wipe away all the properties? No. Hurricanes every 10, 15 years devastate one neighborhood, one area, but it's not that bad. And Jacksonville is beautiful. Jacksonville is just a very, very nice, I don't know, it's on the coast of Florida, and huge naval facility. I think Air Force as well. Huge military town, huge port, international port, trade going through there. So Jacksonville is definitely my target list for investments in 2000.
Yeah, CSX Railways is based there. They dug out their port so they can host the mega ships. Right. They can load and unload, which, like, if you go up to South Carolina, they can only unload. They can't load because their ports are too shallow. It's very business friendly, like you were saying, Navy, Air Force, PGA Tours, a little south of there. There's a lot of good. It's the county seat too, as well, but it's just a really good community. Yeah,
definitely great place to do business. So weather is nice in almost all Florida. I mean, look, it's not as nice as Southern California. To be honest with you, I live in LA. We're spoiled. And you go, further south, San Diego, better yet. But that said, if you pull California out of the equation, Florida is about as nice as any place I've lived in my life or been to and visited in the United States. So, but it depends what you like. I like warm. I cannot stand the snow. I'm just not interested. I've never had to dig my car out other than when I traveled, and I don't ever want to do it again. Okay, so I think I hit all the questions in the chat box. Anybody else have anything they want to share or add or questions? No? Hey, Christian, if ever you'd like to, I'd love to interview you and share your story. I think it's really interesting what you've done. And I think there are a lot of people who want to do that first deal and would love to get the kind of results that you had. And the way to do that is to learn from other people. So if ever you're interested, I'd love to connect with you and
let's do it.
Do some video. Okay. Well, guys, look, we'll wrap up here. This is the LAREIC official podcast. We do this every Tuesday at 3 p.m. Pacific time, 6 p.m. Eastern time. We live stream it on YouTube and Facebook. We have a monthly meeting, second Thursday of the month. The next one's May 11th. I should have a picture of the upcoming meeting here because it's a really pretty picture of friends of mine, Deborah Razzo and Jen Maldonado, and two other ladies, Courtney and Cindy, and that will be May 11th at 6:30 at the Iman Center. Free event, and love to have you guys there. If you are there, I'm a vendor. Come by and say hi. I'd love to see you and participate. I'm Bill Gross. You can find me on social media at Bill Gross EXP. On social media, I'm the LAProbate expert.com. I focus in probate real estate here in California, and I have a national team that I'm building as well. So thank you all for participating. We'll see you all next week. Thank you so much.